What's up, guys? Welcome back to another episode of Raw Stocks. This is Rustic. Today we're going to take a look at Tesla's chart. We're going to look at some of the data and some of the triggers that we have going on. Just give you a brief analysis midweek, something that we can look forward to, just something that's going on the Tesla charts. Before we get started, don't forget to check out the link in the description below. We're going to be using some of Gamma Edge data today as we talk about Tesla's chart. And so if you want to check out Gamma Edge, they are an options data provider. They provide all kinds of useful information. There's a link in the description below, and there's a 14-day free trial if you use the link. But let's get into it. Right now I got the Tesla daily chart pulled up. A couple things we want to just take a look at is on a daily time frame. There's a large fair value gap right here, and you can see we're pushing up to the top of that fair value gap. Okay, if we do close that fair value gap, there's still a volume imbalance here between these two daily candles, a gap if you will, and we'll be looking to push up and close that. Right, ultimately what we're looking for is these are all bearish candles here, and so we don't necessarily have any order blocks as far as like a bullish candle goes in there, but we do have a breaker block here that's important to also recognize on the daily time frame. So we could see rejection coming in around the 340 mark, but anywhere inside of this breaker block on the daily time frame. Okay, some of the other levels I have here we'll talk about as we drop into lower time frames, but that's kind of on the daily chart, something that you could look at and potentially target. Dropping down into the 4-hour chart. 4-hour chart, you can just get a kind of a better look here. On the 4-hour, we did close or invert this 4-hour fair value gap, and you can see in this candle from yesterday, the 4 p.m. 4-hour candle, we pushed up to invert that fair value gap. Now we also have on the 4-hour time frame a bullish fair value gap that can offer us support right there. So I would recommend having those on your chart for the higher time frame, for those swing trades that when we do see some rejection, we're likely to come back down and target that fair value gap, see if it holds or supports price. Take those 4-hour targets off, and we can dump into the 1-hour chart. Okay, the 1-hour chart is where we start to see these green and these red liquidity levels come into play. Those are specific to the 1-hour chart. Okay, and on the 1-hour chart, basically what we're looking at is a potential move again up to that the liquidity here at 363.67 would be like the full extension to sweep the higher time frame liquidity. Now we also have a liquidity level at 355. Okay, so if we go back to that daily chart and we look at where that fair value gap is, right, it's up to 342. So go back to the 1-hour chart, take a look at where 342 is. 342 is going to also be right here. So ultimately we need to get through that if we want to take the buy side liquidity in any way, but that could be our first level of resistance. You can see we also have a target price T2 right there, just right below that fair value gap. So looking for price to push up into that, find resistance somewhere in there potentially, and then we could see continuation to the upside to take the higher time frame liquidity there. We'll also drop down into the 15-minute chart here. Actually, let's go back to the 1-hour and just look at downside targets too. Now, again, I'll go into this on the 15-minute chart, but we're above the bull trigger. So right now we're looking at our T1, T2, T3. We already took target 1, right? Target 2 is at 335. Target 3 is at 350, 349. But if we were to start to fall apart, we could be looking to fall below the bull trigger. Below the bull and bear trigger, we can chop in there. There's still trades that can be taken on a lower time frame, but ultimately if we drop below 309, then we can target the T1 through T3 as our downside targets, and then we have our 1-hour sell side liquidity levels at 281 and at 273 from that big drop on that Trump Elon news. But right now, again, we're above the bull trigger, so we're looking for moves that could take us to target 2 and target 3. Last, we'll jump into the 15-minute chart real fast. The 15-minute chart, again, shows where we took that bull trigger out. we had a really tight run from 321.85 up to 325. So there was a trade there. We took it in the Discord. If you followed, there was also a trade called out on the X account. Then what we were basically looking for is for these levels to hold as support, right? 322, 324 and a half. And then we can see price move up to that 334.90 level. Again, falling below the bull trigger could be a move down to this 15-minute liquidity at 310, right? We ultimately want to see 309 hold as support. There's an order block right here that we would also want to hold the support where that liquidity low kind of comes in. There's a fair value gap down here and below 309, but again, once we got down to 309, and I'll show you where that at is, it basically puts us targeting that T1 or that 302.61. So if price starts to fall apart with some of the data we have coming out over the next 2 days, look to target those lows. I'm going to pop up the gamma edge real fast so we can just take a look at it. You can see right now we are call dominated for this week. We are at our gamma resistance. We don't have significant gamma until we get back up to 330. So if we push up, we could see price get sucked into 330. Then we have kind of a gamma void. Then we got another larger level at 335. So if we go back and look at that, right, our gamma levels at 325, 330, 335. So 325, there's our target level, right? We saw a gamma void where dealers are closing or reducing their positions as we pushed up on that 330 level, right? Because there is limited gamma at above 330 where we get to another void. And then we can push to 335. So we really need to see some more additional contracts being purchased, or just more confirmation that we can get through those levels, right? They also won't offer a whole lot of resistance, but what we know about dealer, the way dealers are hedged is that when we hit those gamma levels, the gamma curve kicks in, and if we don't have high gamma levels on the in between, then we're likely to see price roll back over. So that's why we probably saw that 330. Dealers were reducing their positions. We didn't have anything at 332.50 to drive us higher, and it was near the end of the day, so 335 didn't get delivered on. But 335 is right there on our T2. Then we also see a 350 level, which is just right below our T3. That also has a large gamma level as well. So if we start getting moving up, we could potentially see 350 by the end of the week. A lot's going to really ride on the data that comes out, though, seeing how the market reacts to that. There isn't a whole lot as far as looking for downside. You can see it's all positive delta pushing us higher. 342.50 has a negative delta level right now that could offer some resistance. 342.50 is going to be in between T1 and T2, so we could again see resistance coming in at that level. Right now, we're right at our gamma high. We're at a high delta level, and we're seeing price. So we'll see if price supports that 325. I think during after hours we're a little bit low, but data comes out tomorrow pre-market, and so if we push back up above that level, we could see price run higher. I will drop down to the 5-minute chart as well, just so we can get a better look at structure, right? And if we wanted to draw like a trend line, just to see kind of what's going on with price, you can see we just kind of consolidated past that trend line into close, so it's not going to be extremely valid. The only other trend line we have is low here, so a drop down, right, if we ever did get one, or a pretty significant drop, is going to probably come back down and test that trend line. We can also throw VWAP on there and just see where we're at. So VWAP is at 319. So likely if we did see a drop, down on data, we're going to go below VWAP. If we go below VWAP, we can look at bear trigger, and then the 3 targets for the bear side, potentially coming back down to test this less aggressive trend line. This one again is basically off the board unless we see a gap up or a rip up on market open because of the data being taken positively. But you got your levels, right? We're above the bull trigger, so 325 was target 1, we already hit it. 335 target 2. Target 3 is at 353.59. If we started seeing significant drop below 309, institutions are going to want to push this down to 302.50, 300, and then potentially even 292.63. Again, these are all based on Gamma Edge data levels, quant data. So if you don't have a Gamma Edge subscription, try it out. 14 days for free. If you're not a member on the Discord, please join. The link's in the description below. If you found this video helpful, please smash a like, subscribe, share with all your friends. Help get our name out there. Our Discord's rapidly growing. We're getting more followers by the day. So appreciate all your guys' support. We'll see you on the next one.